Good morning, everybody, and welcome back to the Schwab YouTube coaching channel for the Monday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from our Denver studios today. Pleased to be joined by my friend, Mr. Scott Durfee. Durf, how you doing today, buddy? Happy Monday.
Good morning, everybody, and happy Monday to you as well, Kevin.
Great to have you. We get Scott here on a once a month basis as we rotate through my co-host, which is always lovely. So great to have you with us today, Scott. We are also joined in the chat this morning by our friend and fellow Schwab coach, Connie Hill. You can say hey to Connie. She'll get to comments and questions Scott and I are unable to, but we do try to keep an eye on what's going on there in the chat. So please feel free to post for the duration of our show, as we will go about 45 minutes in total. Now, don't forget, you can follow us all on X. We are available there, posting for you throughout the week, some charts, maybe some headline details, etc. So following us there is a great way to keep apprised of what we are up to when we're not hosting classes for you here on the channel. Now, let's go ahead and get to our disclosures, and then we will dive into the charts. Please remember that everything we discuss today should be considered informational and educational only. We do not make any recommendations here, though we will incorporate technical analysis as we review the areas of the market with you all. Remember, technical analysis is just one of our decision-making puzzle pieces. It's not the entirety of it, so do not base decisions exclusively off what you get in the way of technical analysis. As it relates to technicals today, when we look through these various areas of the market, anything we offer up in this way, again, should be considered informational and educational. Concepts and strategies traders may choose to employ, but please be sure to do your own due diligence. Now, in this class, we follow a pretty standardized agenda. We spend about the first third of this one working through our major indices. So we will look at the S&P 500, the NASDAQ 100, the Russell 2000, semiconductors, etc. We expand out to ensure we cover some of the moving sectors in the marketplace, and then some stocks in the news in our final third of the session. So with that, let's get to those charts. We'll lead, as we always do, Scott, with the S&P. And it's in a pretty important week, I would suggest, given what we've seen from the SPX. So the last 2 weeks here, as we've kind of struggled to maintain some levels above our trending moving averages, that is.
Yeah, and you know what, Kevin? This is the first time, for example, look at that 50-day moving average. We don't spend much time with this one below the 50-day moving average. You're seeing that here. So today's going to be an important day to see if we have actually gapped up, if we hold that gap, if we fade back down. If we've gapped up and we hold that into resistance, there's going to be some significance there.
That's a great reminder, Scott, because we are now two consecutive. Today would be day 3 below the 50-day moving average. If it played that way, that would be less than ideal from a trend standpoint, yeah?
Yeah, no kidding. I mean, this is where if it's going to start breaking down, this is where in a technical viewpoint that we start kind of seeing that happen. And again, at this point, the jury's still out. It doesn't mean that it is happening, but it definitely brings it to our awareness as something that we should be aware of.
Yeah, I think the reminder here needs to be tied to our own personal processes, right? If we are the trader who is confirming a breakdown on 2 consecutive closes below a significant moving average, well, then you might be the one playing a little bit of defense here today, over the coming days, or looking at today as a super important price action day, meaning we need the SPX to get back above the 50-day to more or less work one step closer, Scott, to invalidating this breakdown we got late last week.
Yeah, one step closer to invalidating. I like how you put that, but that's accurately stated, Kevin. That is something again, and not to beat that horse, but again, this is something that will or can be, and I'm not predicting that it will, but it can be significant in terms of what's happening in the overall market beginning
Yep.
today. Yeah.
Yeah, and of course we know we've got a big week on deck. We're going to be hearing from some of the largest companies we know about in the S&P 500 and the Nasdaq 100. Some Mag 7 companies reporting earnings this week, and we've got Fed speak this week as well. So to say that we've got nothing to pay attention to would be a pretty stout lie on my end. So I won't say that. We've got plenty to monitor and be watching. But if we are taking the technical view, then what we're looking for ideally today is a close above that 50-day on the SPX. Let us see, Scott, how we're reacting with our open here in the NDX. Excuse me. Now the NDX. Boy, the weakness here has been palpable. A couple of things that I got to address here. I'm going to zoom in. And this is pretty much what is bothersome for a lot of traders. We've got that short term 20 crossing the 50 to the downside. We've been below that confluence of moving averages, Scott, for about 2 weeks now. And you'll notice we've made a lower low. Now, that's an area that could act as support. Scott, why am I not so comfy now? Why am I not as comfortable on this one as I might be on the SPX?
Yeah, well, because there's a lot of volatility in the Nasdaq right now. You know, we have a lot of important earnings that have been taking place. Mentioned some of that already. We've got four of the Mag 7 reporting today, and you know there has just from a kind of dial in a little tiny bit. I don't want to go into this in great detail, but when you see these types of companies, and you know the Nasdaq is heavily laden with tech companies. When you see CapEx spend going the way that it's going, and it's creating the type of heartburn potentially that it's creating in investors and traders right now, this is potentially what we begin to see. So we are almost getting to a point break with
Yeah.
the Nasdaq. We've got to see capitulation, or it's going to continue to fade.
So Scott is maybe the trend trader at this moment really can't get away from the fact that we have lower highs and lower lows. And if you're simply trying to validate reasons for support holding in, you don't have a whole lot to work with here. I mean, we've got lower lows in price, lower low in the RSI down below last week. Now that could be support, but if that is support, terrific. But it doesn't mean that we're suddenly looking at a continuation of the uptrend. We could rally into the 20-day and find that again to be resistant for us. So how can traders maybe manage NASDAQ 100 positions given this seeming weakness over the last couple of weeks? Should we be a little defensive?
Yeah, I think you could. I think, in fact, I think it might be prudent. A trader might be think is prudent to be defensive in a situation like this. Kevin, look at that level. If that is a level of support, and one
Yeah,
could argue it that it is. I mean, there are different levels of it of weighted. You know, that's not a real great level of support. There's been other levels of support that are more predominant than that. But when we see that level of support, and if it does bounce up, we are now moving into a level of resistance. And you see that level of resistance coming down. Essentially, we see a bit of a squeeze, potential squeeze
sure.
happening in terms of the trend. And definitely, traders that are trading the NASDAQ will have to be paying attention to that. Doesn't matter what your posture is, bullish or bearish.
That,
You're going to
that's
have to pay
true.
attention to that.
Yeah, and this is where, Scott, I probably should remind traders that a process that many incorporate is not to necessarily suggest that they know what's coming here, but rather use the price action of the market to help them decide whether they're going to be a little bit more risk on or a little more risk off. And so sometimes that's just, hey, I'm not as comfortable today as I was 2 weeks ago. Maybe that means I should be building cash, sitting on fewer dollars invested in the market. That's one way that a trader will manage that emotional aspect of things. Certainly, you know, this action kind of validates that decision to be a little defensive. You know, I'm looking at this trend line that I was watching before, and then when you broke the trend line, you'll notice, yeah, we made that lower low, and we also made lower highs. So we could also just take very basic technical 101 stuff to the table here, Scott, and use that for some of our emotional management, so to speak.
100% agree, Kevin. And not only that, But look at the last 2 days. Now, today is red, but today's not over. But if you look at the last two candles, and in fact, if that candle there that you're
Yep.
having over there, the next one to it, if you go back to the one on the left, that gap down is essentially part of a down move as well. And so we're seeing down candles over the last few days. And again, that is speaking to potentially the strength of a downturn or a squeeze to the downside on the Nasdaq itself, for sure.
Yeah, let's address a question here. Trade and Grow is asking, aren't both the SPX and NDX showing more of consolidation since May than a downtrend? And I think you could say that that remains the case in the SPX, but in the NDX it looks a little different, and that's of course tied to the component, the breakdown, the makeup of those indices, Scott. We know that the SPX is more broad in nature and the NDX is far more focused in nature on technology. And I think that that knowledge tells us plenty about this short-term weakness. But I would lean more towards what I led with there, which is consolidation in the SPX and potential breakdown in the NDX. Does that valid? Is that valid to you?
Well, let's talk about what is a breakdown. Well, how do we term a downtrend? A series of lower highs and lower lows. I mean, period. There you go. And so we have that. We're seeing a series of lower highs and lower lows on the Nasdaq. So consolidation or downtrend, we could be downtrending as we consolidate, but that downtrend we definitely need to pay attention to.
It's true. And we could also, hey, everybody knows that sometimes when you draw a line, you just need to redraw it to see the real trend that comes to play once you've passed a few more days of market action. And it could be said, Scott, I mean, that doesn't look like an abject breakdown following a massive rally yet. So we could say that that's all we're doing is still consolidating in the midst of a downward, kind of a falling wedge to a certain extent, which historically proves to be bullish actually, but it requires price to get in gear relatively quickly.
And that's key.
Yeah.
I mean, that's key. That's key to everything that we ever talk about here is just price getting with the program. So
You're
that's
right.
what it does. Yeah.
You're absolutely right. Okay, let's see how the Russell 2000 is acting today. Yields have been rising as it relates at least to the 10-year we've been watching. We'll look at that momentarily. But boy, I got to be again impressed with the resiliency of the small caps here, bouncing off the 50-day today.
Yeah, and as things continue to progress, and as eventually we see interest rates become more favorable, that's not going to happen right away. But we are positioning for that. We've been waiting for that already for a few years now, and we will continue to wait for that. And when that does, we'll see some good action, some positive action in the Russell. In the meantime, though, Kevin, it's kind of holding its own. I mean, look what it's doing right now. It's bouncing. Is that purple to 50 right now? It's using the 50
Yep.
as a level of support, which is confirmed. If you look to the left, it indeed is. Old resistance became new support right there. The 50 popping right there. So, and today's candle, look at today's candle. That's not a little candle. When we have candles that are larger in size by comparison to the other candles on the chart. Now, there's a lot of big ones there, but in recent days, especially the last 2 days prior to this one, now we have a big green candle. We'll watch for that to see if that creates momentum to the upside. We have another level of resistance that it's coming into right there as well.
Yep.
So technically speaking, we'd expect that or watch for that to break that resistance before we're looking to confirm an upward move.
Is a great reminder, Scott, because as you stated, 2 weeks basically now below the 20-day moving average. So we've lost essentially the short-term trend. You can see that we rallied here, fail. We closed above it here and failed the very next day and had to test the 50-day. Well, now today's intraday high is right at the 20-day. That seems notable as well. And so clearly, I think the takeaway is, hey, traders want to see a close above the 20 to kind of validate what we've been getting here. Now, if you're that trader waiting for a close over the 20-day, that's fine. But if the candle finishes like this today, some traders are going to look at that as a potential hold, being that we've tested a support range that we really haven't seen since April 8. The fact that we tested it with our close on Thursday and Friday both, pretty notable for us. And so now we're looking at, the last, 3.5 months, holding the 50-day moving average. If nothing else, Scott, a lot of traders are going to say, look, I'm comfortable buying here because any money I expose would maybe be limited in risk. They would possibly move on from a trade of new dollars added at this point on a now new close under the 50-day moving average, which means short-term support and limited risk relative to new money that they might explore in the market in the small caps here. So it's an interesting spot, a good spot for support. One other final note that caught my eye here, Scott, is the horizontal support in the RSI as well. The fact that we've held that. Talk to us a little bit about the importance of RSI, but more specifically, how holding this ledge in the 45 to 55 area can speak to the bullish nature of the trend.
And that's the important component of the conversation right there around RSI, is that it is indeed bouncing off of that level of support for RSI. And that's a pretty sharp upturn. Now, look, if you go back and look at the corresponding upturns on RSI to the price action, you're seeing something kind of interesting. You're seeing that as they pop up, you're seeing the price action move with it. We would expect that. We would expect that. Now, if that continues to happen and we see RSI move more up into that upper reversal zone, in other words, continue to move up to the 70 line or even above that, then obviously we're getting a lot of collaboration around what's happening there. Definitely looking a lot more bullish. But again, we need these things to confirm with the actual price action.
Totally true. Obviously, we know price is king. We're always waiting for price to validate it. But if you're the trader who looks at RSI, you can take a bullish slant to the action based on the fact that the pullback to what's been oversold conditions has happened in the 50 line zone, right? Which really gives bulls a little bit more confidence of a bounce. And yeah, we're getting it very early today on a Monday, your first 20 minutes of session. But a positive look, at least initially here. We'll look for some confirmation tomorrow. Can we get a close over the 20 or any price action above the 20 tomorrow? That would be really, really helpful for us. We had a request to take a peek at the equal weight index in the SPX here, Scott, and I thought that's a perfectly appropriate thing to do. Let's use the SPX EW. And again, going back to what we said earlier about how the S&P 500 appears to be a little stronger, it's because of that allocation, of course, to the various areas of the market. Now, remember, the SPX by itself is a cap-weighted index. This is equally weighting every one of those 501 stocks, Scott, and it leads us to maybe think that there might be a broadening of this rally.
Yeah. It's pretty obvious that's what it's talking about there. I mean, there's some interesting things happening on this chart. You see RSI again, it's bouncing off the level of support. You've got some really solid movement, even around that 20-day moving average. Let alone the 200. We haven't been near there for quite a while. Look at the size of the last two candlesticks on that, Kevin.
Yeah. Very nice.
Yeah. Very bullish, very bullish. Those are momentum candlesticks, which means that the bulls are winning pretty handily during that period. And now we're moving right up against on the equal weight right there. We're right up against a level of resistance. And so will that old resistance become new support? Time will tell, but that's one of the things that we could be looking for.
Yeah, I think from the technical perspective, I have to agree. I mean, it's bullish in nature. We're trading at new highs. And the macro story is where I think traders get a little bit even more confident here, because we've witnessed the drawdown in tech. We've witnessed the pullback in the NASDAQ, and yet here we have those other categories of the market providing some leadership. And we can also do that with a visual on the S&P 500, taking a look at what's in the green today. Tech has got the biggest player there, Nvidia, and some of the semis are under a little bit of pressure today. But look at those financials, look at those industrials, look at those the healthcare and discretionary today. Lots of green to be found, but not necessarily heavy in tech.
This is a market, Kevin, that wants to move, and they're just looking for reasons. This market is looking for reasons, not just technical reasons. It needs geopolitical reasons. It needs the fundamental reasons and all the other reasons. But this is a market that is poising itself to
Yeah.
move. Yeah.
I saw a note in the chat about some of these, value areas of the market breaking out. Don't forget, Friday is our ETF day for Trader Talk. I will not be here because Scott and I are on our way out to Dallas this weekend for our market drive. But just a heads up that James Boyd will be back offering you that Friday class, and certainly he's going to be talking about those ETFs that he keeps a very close eye on in the value space, amongst many, many others. So just make sure that that's on the calendar for you all this Friday, everybody. That's one we do not archive, of course. Scott, let's get back to what's happening here in the semis. We noted a little bit of breakdown here, the weakness. This is such a chart that the consistency of this chart relative to the NASDAQ is so obvious to me, Scott. As I zoom in a little bit, it's this breakdown to a new short-term area. Could it be a higher low? It could, right? But it's also notable that we rallied into resistance and have since rolled over. So we're looking for price to really get in gear here quickly so we no longer have to overthink this, aren't we?
Yeah, wouldn't that be nice? And
Yeah,
that's kind of what we're hoping for, is that everything will move in a way that we don't have to think it through this. But unfortunately, I think we kind of do. Kevin, a couple of things that I'm seeing on this chart, you mentioned them, but if you could draw a line from that green low day, most recent low day, and then just follow that up along to the bottom of today's action, for example.
okay.
Yeah, right there. I mean, right there, we're creating now. Today's not over. It could go lower. I get that, but we're creating a bit of a wedge type of pattern. In fact, Kevin, if you'll draw from about June 29th, there's a red candle up one more, two more up. Go right above that, right there, and go
Okay.
that red candle to the right of where you're thinking.
This one right here.
Draw down along a line. There you go. And
Gotcha.
you see a bit of a squeeze happening there. We'll keep an eye on that. We'll also keep an eye on RSI to kind of give us some indication where that might go. But right now, that's kind of what we're looking at.
Yeah, and it's really not fantastic, Tertiary. And when you look at that RSI, this is an example of the RSI not giving you that bullishness that you were looking for. We were getting it in the SPX and in the Russell, but you're not seeing it here in the semis. And I think it just means more short-term weakness, essentially, is what we're dealing with. And until we see something other than lower highs and lower lows, well, then we may very well be a little bit defensive even still. It's a group. Now, the hardest part for many traders, of course, is going to be changing the mentality or changing the process a little bit, because the mentality leads you to think, oh, what's been working is going to continue to work. This is something that should change fairly quickly. But be diligent in your process, everybody. If you're leaning bullish, that's fine, but make sure you know where that changes for you. For some traders, Scott, it could be that very brief uptrend line we just drew in, looking at
Yeah.
the low today. I mean, a takeout of that low, of that line, implies for many traders that we're going to go back and test the low we made 2 weeks ago. And that's not going to feel any fun, that's for sure.
Yeah. Yeah, there's nothing fun about that. That's for sure, Kevin. You're
Yeah,
right. I think it's just interesting, and just keeping an eye. We've got some underlying effects that are happening in the semis. Some of that is
sure.
capex stuff. Some of it is the uncertainty of the geopolitical landscape, et cetera, and all of that will play into this as well. So, as we see kind of a perfect storm happening, I'd keep a close eye on this, because it's going to start developing or showing levels of significance sometime soon. Whether that's
Yeah.
lower or higher, we'll see how that reacts. And again, all these things play into it.
Sure do. Just, I think the reminder needs to be if you're a technical trader, then lean into the technicals, let price dictate when you decide to be more offensive versus defensive, and just have a plan, as we often say. Know how you want to attack the market when it does certain things. Should be making your process a little bit easier on yourself. Doesn't mean you're going to be right, but it means it might be able to easier manage our emotional tie to our trade process. Scott, I think we have to look at the big reason for today's pop, largely tied to the move in oil. So I'm going to bring up the futures quote on oil. We'll look at this a little bit. Remember, everybody, we're not advocating for futures trading. We're going to use this as a means of understanding the price movement in oil. And remember that if you do want to trade futures, you're welcome to do so here at Schwab, but you do need to go through the requisite steps to get approved to trade futures, and then you'll be ready to rock and roll. Now, Scott, the big thing here was the significant move we saw to the upside in the last 2 weeks as things kind of escalated. It was pretty big. I mean, the rally into the resistance level was about 37%, so not a small move to the upside, and it was pressuring, in this case, tech stocks, obviously, and it creates concern relative to inflation. Now, Scott, is the daily chart the one you think that matters here, or would you want to scoot into something intra-period where we might be able to get a little more clarity?
Well, let's kind of look at both, Kev. So
Okay.
let's you got something a little more intro. Let's look at that for sure, because clarity will come as we get a little more dialed in, closer to it. There you have it.
Yep.
So what do we got here? What do we have here? A 4 hour chart. It looks like.
Yeah, so we're looking at a 90-day 4 hours. That was our ultimate peak in the ballpark of 117, 118. And then interestingly, that rally broke the downtrend line, but we got thrown back pretty quickly. So I guess the question is now what, right? Because it's such a macro such a headline driven situation here. Can we just make it as simple as, all right, back above the downtrend line and we're bullish on oil, and take out the support we just retreated to on the overnight basis, and maybe we're bearish on oil?
Yeah, you got me scratching my head on this, Kevin. I mean, oil just has so many influencers right now. So, I'm a technical guy. I know you are too. This is where I live and die, is in technical analysis. This is one of those cases where outside influences, in addition to technical analysis, are going to weigh heavily on what we see happen. So we need to pay attention to that.
Yeah, I think this 83, 82 and a half, very important spot. We shouldn't be shocked to get a bounce at that level because of the importance of it. I mean, it was significant when we broke it to the upside, right? Big move off of that ledge. In fact, just from that breakout, it added 13%, Scott. So we shouldn't be surprised because we know commonly we get breakouts and throwbacks. So we're getting a bounce here, but next up could be a bounce into potential resistance. That could be the 20 period EMA that I'm utilizing on this chart, Scott. Notice how that was support for the better part of the last 3 weeks, and now we're below it. So now it could be resistance. So don't mistake the bounce here as an all clear bullishness to the upside. We have just as much opportunity to run ourselves into resistance as we do continue that uptrend we've been seeing since late June.
And as a technician, that's technically what we would expect. Now, if it were to break through that level of resistance, that would be something different, and then obviously become potentially actionable.
Yeah, that's what we're looking for, right? Something different that helps us understand the next potential move. We often say it, Scott, that the technicals don't predict the future. It just helps us understand where the next level could be for resistance or support, and it helps us manage our risk more than anything else. Okay, one other area that I wanted to touch on here, which with an interesting chart and also speaks to kind of risk off nature of the market to an extent. We're going to look at Bitcoin. Now, Bitcoin will also use the future symbol, but you should also know that crypto trading does have various other risks of note, not by any stretch the same mechanisms that the rest of the market incorporates. So be aware of those risks. You can certainly follow up today's session with our cryptocurrency class, which is coming at 11 a.m. Eastern today with our man Ben Watson. So you can check that one out as well. But Scott, what I'm noting here has been a lack of change in price action. But what's going on with that RSI? This is looking like a stronger chart in the RSI than it does in the price.
Yeah, and price may lag the RSI on this, and that's kind of what we would be as technicians watching for. That RSI could be telling us, pay attention, gang. The price movement should be or could be moving up. So we'll kind of see how that plays out. But Kevin, that's what RSI is telling us right now. And you're right, price is lagging the RSI.
Yeah. What about a move through the 50 days, Scott? Could be a spot where traders get a little bit more comfy with risk as it relates to Bitcoin?
Yeah, no question. As a matter of fact, a lot of traders, investors would not enter a trade until it did confirm a close above that level, that level that you're showing right there of resistance. And then, Kevin, look at the we have a diagonal support coming into that too, which is coming into that right there. There you go. We have that diagonal support coming in, and so we've seen a little bit of a squeeze there too. Again, if it comes to that level of resistance, we would expect it to pull back, but if it breaks above it, then that's something different and that becomes actionable.
Okay. All right. Well, that may give traders something to keep a close eye on. I know that, when Bitcoin is kind of languishing like this, the enthusiasm for Bitcoin does kind of run its course a little bit. It puts the test to those hodlers, so to speak. They, get stuck in these positions and they're saying things like, boy, I would love to buy more, but I just don't have more money to deploy. Things like that happen, unfortunately, in the midst of downtrends. But this has been a level we've talked about. 60,000 is a level that's been widely viewed as longer range support for a while. So I found it interesting just that the RSI is acting a little bit different than what we've seen in price. But let's see if we can't get price to start moving with it. All right, Scott, we are in our final 15. I wanted to look at three significant sectors that are not what many would be looking for. Those being, technology would be the leader that many people want to talk about. But I wanted to base this on pattern setup and recent strength. And so I wanted to look at industrials as the first one. The reason being, Scott, what a nice pullback. Again, talk to me about just some basic technical 101 stuff on this industrials chart.
Yeah, this would be if I were teaching a technical analysis class and I got to hand pick a chart to use, this might be a very good one because Kevin, I love what you just did with that first rectangle, that gray box there. We have a pretty solid, used to be resistance, became a level of support. It's held that level of support a couple of times. We've gone down into that level of support. Now we see a bounce off of that with a pretty good a really significant hold,
Yep.
and we're continuing to move up. The one thing that I see, Kevin, that it doesn't concern me, but it is something that I'd want to watch is we do see what is called a morning star developing for today. Today's not over. That candle will look potentially way different than it does right now, but that is potentially, if that were to end up that way, that is a bearish candle at a level of support of resistance there. And you do have a level of resistance there, Kevin. If
Yep.
you'll notice that as well. So I keep an eye on that. That could be just kind of something to keep an eye on right now.
Yeah. So interesting that the enthusiasm has not been held each of the last 3 days. We rallied a bit, pulled back at the close, held the 20, rallied even more on Friday, but didn't hold and still held the 20, rallied through that, made an intraday high again today, but haven't held it. So it's an interesting spot. So do we take that negatively or maybe do we take that positively in the sense that even though we've not maintained with some of those big, beautiful range days that we love to see if we're bullish, we are above the 20-day again for 3 days. I mean, that's we can't argue with that. Even if this candle holds, it might mean a weak open tomorrow, but it doesn't necessarily mean a reversal.
And that's going to be an important key to watch, Kevin, is if we can stay above that 20, that's going to be significant. Once we start testing, if and when we start testing that, that'll be
Mhm.
something different.
Yeah. Okay. So that gives us short term something to watch. If not the 20, then the 50. I think the takeaway on industrials is the solid, perhaps, nature of the 50. I'm going to call it out here a couple of times. Right below it briefly, but essentially holding the horizontal support when we recaptured the 50 there. So that again, just kind of validating the 50-day moving average as support, as has the price action of the last week. Let's also look at healthcare with a similar chart, Scott. A big move to the upside of late, taking out areas of former resistance, potential support. This one a little bit more strong because our pullback here, Scott, came just to the 20. We didn't get a test of the 50 at all, and we've already closed out of this little bit of a bull flag, it looks like.
Yeah, that is a bit of a bull flag. A trader could actually take that flag pull and use that as a target. And I don't think that that would be unreasonable. I think that that's what we see happening on this potential. What is it we're looking at? Healthcare.
Healthcare, yeah.
Healthcare here. So, Kevin, a couple things that I noticed is, look at the last few days, look at the green candles. Those green candles have been significantly large and they have been moving to the upside. So we see some momentum happening there, confirmed by RSI. RSI is moving really nicely to the upside. So,
Sure.
healthcare appears to me to be quite bullish right now, Kevin.
Yeah, you really can't argue. I don't think you can argue with that. I mean, you might try. I just think you're going to find yourself losing that argument unless we saw. Let me pull my line back off of here to clear this up. 2 days above the 20-day. If we don't get something flipping this candle today, it's going to be really hard to look at this as anything other than bullish. It doesn't mean we know that it's definitively going higher. It certainly doesn't mean that the measured move calculation that Scott posited has to be achieved. We know better than that, and yet it looks positive based on a lot of this action. And today's candle right now kind of validating that. And one thing I'll remind you all about as I shrink down the scale here a little bit. When you take this potential flagpole to define your possible move to the upside, traders, you have options here. You can base it on the bottom of the flagpole if you want a more conservative target. If you want a more aggressive target, you could activate the line and take it to the top of the flag and draw it like so. Other traders might put both of those levels in and make it a range upside and then say, all right, if we get into the range, I'm going to sell a portion of what I'm long so that I can make sure that I take a little bit of profit. And then if it continues, terrific. You all know my preference on that, because if you sell a little into strength and it keeps running, you were wrong, or you were right to sell some because you've held some. It kept going, you participated. If it pulled back and you sold some, you were right to have sold some because it pulled back. You can be right both directions if you're not an all in, all out trader, Scott. It's one of the processes that I think many traders need to get a little bit more comfortable with, perhaps.
I could not agree more, Kevin. This is not an all or none proposition. It never is. And again, scaling in and out can be an important way to do it.
Yep. And then one more option, because I've seen a request from Barbara here, or excuse me, Paul wants to see that with a flag based on the possibility of an extension with the Fibonacci's. And that would be as simple as going to the peak following the flagpole development to the bottom of the flag, and then you could start targeting with some of these layers as well up above. The 200% there, right equal to the conservative target of the flagpole, and then maybe the 261 getting into the ballpark of the aggressive portion of the flagpole. But again, if I was going to just give you the reminder, if you draw both of those flag poles, this is what that range might look like. First one from the bottom of the flag, the next one from the top of the flag, and that can give you the range for a potential target as well. There's a lot of ways to go about it, Scott. We don't have to get cute. We just need a plan that works for us and one with which we have comfort.
And that's all that matters is that we have a plan. Because if we go at it and say, well, should I do it this way or should I do it that way? Creates confusion, and a confused mind does.
This
Yeah. To have a plan is really a prudent way to approach.
Boy, do I wish I couldn't relate to that. Confused mind has a difficult time making decisions. It's
You're
true.
a trader and you're honest, you can relate to that.
All right, last sector to check on here. We're looking at financials, and I hope you all realize that what we're bringing to the table today with these sector looks is specifically groups that have been in uptrends, pulled back to areas of short-term support, and moving off of them. Scott, this financials chart looks so akin to the healthcare chart, doesn't it?
Yeah, it looks like you could just superimpose one over the other, and with most of it would be pretty much the same. Again, there you have it, Kevin. You're drawing in and that could actually also be a bull flag if like we had on the other one. But
Yeah.
those channels that Kevin's showing right there are significant importance. Look at the first one that he drew to the left. Look at how that big green momentum candle came out of that. And then we had some trajectory to the upside once that happened. Now we've created a similar scenario. We see a bouncing off of a diagonal level of support. We see a break to the upside, even though we don't see a great big huge green candle come through there. It's nonetheless significant. I mean, it's exactly the same significance because that gap indicates a move to the upside. A green
Yeah.
candle that's large just indicates a move to the upside. So just because the candle's not there doesn't mean it's not as significant. It's absolutely is, Kevin.
Excellent stuff. Look at that RSI as well, holding up a really elevated level. So the strength here in financials is quite notable. You've been above the 20 all the way back here, everyone. So you know what? If you start talking about what, and if you've been watching this show since back in April, we've been talking about these levels. I've been calling these out along the way, talking about the potential for consolidation to lead to a new trend. And not only did it happen, it's been working beautifully since that breakout on June 4. We basically have been moving upward nicely for 6 weeks, and the 20-day continues to offer support there. We'll see if that continues to play, but for now, at least, what we've had is what I see: one bull flag, a second bull flag, and now we're breaking a flag and maybe building a new flag pole today, Scott.
And interesting. Look how symmetrical those up moves are. I mean, you could take that bull flag pole and almost superimpose it on every one of those upward moves, and you're going to be within a very small margin.
Yeah.
Uh, there. Yeah, look at that. I mean,
I mean,
it's just incredible how sometimes the technicals just work in symmetry.
sometimes, yeah. It's fun
Sometimes.
when they do. We know they don't work every time, but it's nonetheless quite fun when they do. Scott, we called out some reporting this week on some of those Mag 7s, and we had one Mag 7 actually get upgraded today. Let's bring that into the table as we wrap things up here today. Alphabet, Phillips Securities upgrading Alphabet to buy from Accumulate. New target here is 425. That's actually down from 450. The company reporting robust revenue growth across its core business segments. Phillips remains constructive on Alphabet's long-term outlook here, and that states further the vertically integrated AI ecosystem should continue to support robust growth both across both ad as well as cloud businesses. Scott, I have to think you're eyeballing the importance around the 200-day moving average in blue here.
Yeah, you think, Kevin, that we've worked together, but you're 100% right on that. This is an interesting chart. We know again, this reaction to the downside, that gap to the downside, was a direct correlation to the way that traders and investors looked at their earnings report, which talked a lot about spending more money than the revenue coming that they had received in CapEx spend. Now that's
Yep.
not necessarily a bad thing, but it kind of got traders and investors gave us a little bit of heartburn right there over the
Yeah.
last days, right?
Yep. Now, if nothing else, Scott, it looks like new traders here. Again, we don't know if this is going to lead to a break of those lower highs we've been witnessing off the peak for May. But what we could say is that new traders to this trend have good risk versus reward if they think the trend is going to continue rather than to break here.
Certainly, and they may not be wrong. I mean, and fundamentally, in their technicals, so the fundamentals around their technicals, if that's a thing, that's an accurate, potentially an accurate depiction of what could be happening. I think too, Kevin, that it may not just be new money, but it may be money that's just kind of been sitting on the side waiting for a pullback and an opportunity to come back.
Sure.
I think there's a lot of optimism, obviously, a lot of optimism still around this company.
You're right. And when you see a 20+% drawdown, 22% from the high close here to the low last week, that starts to entice those longer range investors who may be looking to expose money, looking for that opportunity. You could find that the 200 gives them that. The fact that we cleared it, Friday's action and Thursday's action has now been cleared with today's. If this candle finishes like this, it's going to give bulls a little bit of confidence for the opportunity to the upside. Maybe an initial area for potential resistance could be the gap zone. We all know the importance of gaps. Not every gap fills, of course, but when you have them in the short run, they absolutely can act as near-term resistance in this case. So eyeball that 341, 342 zone, and then potentially the 50-day moving average above us, because the 20 has been a lot more porous. We've moved through the 20 both directions, Scott. I think traders are maybe more apt to eyeball the 50-day, and that's coming in around 363. So an interesting chart nonetheless. A good pop here off the upgrade this morning. Scott, we're at time, buddy. If you can believe it, that as always goes pretty quickly here, but always appreciate your insights. Thanks for being here and sharing them with our viewers.
Thanks for having me, Kevin. It's good to be with everybody. We'll see you on the road or back here again soon.
That's right. We'll have Scott back next month, as always. And if you are in the Dallas area going to the Market Drive on Saturday, we look forward to seeing you there. Make sure you follow us on X. If our conversation helped you at all today, hit that thumbs up button below for us. That'll help us out a ton in the replay on the algorithm in YouTube here. And we appreciate you. So big thanks to Connie and a big thanks to Scott. Big thanks to all of you for being here. Have a fantastic Monday, everybody. We look forward to catching up with you again real soon.